Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. And today I just want to briefly go over the announcement from the Bank of Canada this week that we can expect that should the economy continue to grow over the coming year, that they're thinking of raising interest rates as early as 2022. This stands in stark contrast to what they said just a few months ago when the bank announced that it wouldn't be raising rates until at least 2023. The announcement of this week that we could see higher interest rates coming up definitely presents a few problems, both for the business in Canada, for home buyers in Canada, and for the Bank of Canada in general. So in this video, we're going to briefly go over the top 3 problems with the Bank of Canada's announcement this week that we could be seeing higher interest rates in the future. One of the biggest problems with the Bank of Canada's announcement comes down to businesses borrowing. So we can see from the Federal Reserve and from the bank over the past months and over the past year that they have attempted to reassure business and consumers that we can expect to see lower interest rates for the foreseeable future. Main reason for doing this was to reassure business that if it borrowed to invest in technology, to invest in its workers, to invest in its working capital, that it wouldn't have to pay a large amount of interest on those loans in the coming future. Given that we're definitely experienced an economic downturn in the past year, the government is looking to business to help stimulate economic growth and move our economy back to somewhat normal to the pre-COVID days. So by signaling to business that they can rest assured that rates will remain low, the idea is that business would help to stimulate economic growth. However, by saying that now that we could be growing too fast and that our economy could be experiencing too much growth over the coming months, it's now kind of somewhat going back on its word to business that they can rely on these low interest rates. So that creates a problem for businesses in Canada. If they can't depend on these low interest rates in the future, they can't be sure that the investments that we're depending on for them to help rebuild our economy, if they can't depend that those investments won't break them or won't cause them a lot of economic problems in the future. So that announcement this week could definitely make some businesses second guess whether or not they should be investing heavily. So that could almost, in effect, create a self-fulfilling prophecy, or a self-defeating prophecy, I should say, where they announce that they're going to have to raise rates because the economy is going to grow so much, and that announcement could actually hurt the economy's growth in the long term and in the short term, really. Second, the Bank of Canada's announcement could definitely have caused an issue with home buyers. As we've mentioned on this channel and in numerous videos, and it's been all over the news, the real estate market has been driving a lot of Canada's GDP growth. Further, Canada's real estate prices have gone through astronomical growth rates in the past year, especially that we see in London, where the average house price has gone up almost nearly $200,000 in the past year, from $450 up to well over $600. So real estate growth has definitely been booming, and a lot of commentators, myself included, were waiting on the budget announcement this week to see if Canada was going to attempt to cool down those real estate prices. Well, when the Bank of Canada says that they're going to be raising prices by 2022, that could very well induce a lot of buyers to think, well, I better rush in now and buy, because rates are going to be a lot higher. I'm going to be locked out in the future. So when the bank says that they're going to be raising rates, that could help to only add more gasoline to the fire that is Canada's real estate market right now. And this comes at a time when most analysts, and the big banks included, are expecting the government to actually try to cool down the housing market in the short term. So why the bank would make this announcement right now when there was already a lot of disappointment following the federal budget, where any measures to cool down the housing market were disappointing to a lot of banks, to a lot of commentators. Why they would decide to do this now and only add fuel to the fire, that remains to be seen. And finally, the third major problem with the bank's announcement this week is that it comes down to trust. Businesses and individuals look to trust when they're conducting their transactions out in the open market, and that's both in real estate and in business. So when the Bank of Canada says in January that they don't plan on raising rates for at least 2 years, well, that people make decisions based on that 2-year window. Businesses especially make decisions off that 2-year window. So when the bank says stuff like that, contradicts itself within a 3-month period, well, that's going to make some people and some businesses definitely start to rethink what the bank says in the coming months, at a time when we really need to be able to trust what our central bankers are telling us in order to adequately plan for the future. So the announcement from the Bank of Canada this week that it was very well going to have to raise interest rates in the coming year most likely had 3 very negative effects on the Canadian economy. Businesses are going to be less likely to invest. Homeowners, or home buyers, I should say, are more likely to run out and try to lock in now, try to get their house now, and pay a little bit extra for doing so if they think they're going to be locked out in the next few years. And that's likely to only pour more fuel on the fire that is Canada's real estate market right now. And finally, and almost most importantly, is a trust issue. Granted, stuff does change, and as we've seen in 2020 and in years prior, we do have to roll with the punches, and nobody has a crystal ball. With that said, it's only been 3 months, and the bank stating that it's going to go back on its policy by almost a year, a policy that it just had 3 months ago. Well, that is definitely going to make investors, individuals, and businesses rethink how much they can trust what the Bank of Canada says going forward. Everybody saw what happened when the Federal Reserve chairman last month announced that they'll be keeping rates low for the foreseeable future, and nobody believed them. And as a result, there was a huge dip in the stock market. Well, that's the investors and that's stock owners reacting to a lack of trust. And in business these days, and especially with us needing our economy to grow at a much quicker pace, trust is the name of the game. It always is, and especially with money, with relationships, and with the government. Trust is the name of the game. So, with these 3 issues in mind, we'll see what happens with the Bank of Canada in the future, whether or not if they'll be raising the stress test, if they'll be trying to cool the housing market, which the government obviously didn't spend that much time doing during the budget announcement. So time will tell what the results of these policy announcements will be. If you like this video, please do click like and subscribe, and we'll have more information out as soon as it becomes available.